Hello everyone, welcome to this property market update for the Whitsundays, right? We're coming towards the end of the 2022 year, so let's see how the property market's been tracking over the last 3 months, and we're going to take a bit of a deep dive into this marketplace, look at what the data is telling us, and hopefully that's going to help and add value to those that are looking at potentially buying in the area or selling, guys. So stick around, it's going to be jam-packed, full of data, full of information, full of insight and value. So before we cover off, I just want to quickly give my business a plug here. I am the owner, director and lead buyer's agent for Capricorn Life Buyers Agency, right? One of our life buyers agency brands located in central Queensland. We've got an office in Rockhampton, Mackay and Bundaberg, and we are buyers agents, right? So we're representing the buying side of the transaction, and we're usually helping, struggling home buyers in the area, investors, interstate buyers, and those that are generally geographically challenged. So if you are looking to potentially buy in the Whitsundays property market and you are unsure about what you're doing or what the market is doing, and you're finding it hard to navigate through it, and you feel as though you might need some professional assistance, then feel free to reach out. I'm more than happy to have a chat. Thanks, guys. So we'll be breaking down the data, in today's property market update to really paint a picture and tell us a bit of a story as to what's going on in the Whitsundays, right? So if you have been a potential buyer or seller that's sort of wanting to know what's going on, whether or not I should buy right now, whether or not I should sell right now, I'm hoping that this data-driven analysis will give you some insight and certainty around what's going on. So we're going to look at different things, right? We're going to start off by looking at what the median price has sort of done over the last 3 months. We're going to look at the stock levels. We're going to look at the demand side, the supply side. We're going to look at what the overall absorption rate is. And then we're going to poke our head over to the rental side to sort of see what's going on there as well. And then we're going to finish off with some summary and some trends and some key takeaways so that then you can figure out what you want to do going forward, whether or not you wanted to buy or sell. But yeah, guys, this is going to be a really data-driven approach, and it can be pretty heavy at times, but I'm gonna try and break it down as simply and easy as possible so that it can be consumed and it can be digested by you guys at home. So let's start off by looking at the median price and what's been happening with that in the Whitsundays area. And we can see here the median price in the Whitsunday area as of November 2022 is currently 540,000, and it's actually up from 519,000 in July 2022, right? So we've seen essentially the median house price grow by 3.8% in the last 4 months, right? So a 3.8% increase in the last 4 months. So there it is, guys, just sort of laid out on a silver platter in relation to those that are just figuring out and wondering what's going on right now, right? If you're a buyer that's sort of been sitting on the sideline as a result of these interest rate rises, right, and you don't really know whether or not the property market is crashing or it's going backward, retracting, well, we've seen here, from the last 4 months, evidently, that it's actually done quite the opposite, right? So we've seen, the best part of $20,000 grow to that median house price. And this is a great thing for the Whitsunday area to continue for that median house price to continue to grow, particularly for those that have been long-term owner occupiers in the area. The equities are starting to build up. It might lead to, those particularly in and around the early beach area, because what generally is going to happen is for this median house price to continue to grow, it needs to be pulled up by transactions that are much higher than this aggregate of 540. So we might see properties selling for 700, close to $1 million, slowly pulling that median house price up over time. So we've had a lot of transaction volume in and around those price guides, so it's pulling this up. But it can also lead to potentially some people that are aspiring homeowners that want to buy in some of these places like the early beach catchment, to essentially might be priced out as this median house price continues to surge along. But yeah, guys, this is despite consecutive interest rate rises, obviously a change in sentiment across the marketplace as a whole. We've seen an increase here in the median house price for the Whitsundays. So overall, I think that is a positive thing for the housing market overall, that the median house price has grown. So the best way to analyze and diagnose why there's been a change in the median price, over the last 4 months, and we need to sort of break down what does the supply side tell us and what the demand side tell us, and that's basically economics 101. If demand exceeds supply, then we know we're going to be in a situation, particularly in the property market, where there's going to be multiple bidders per transaction or per property, and that's going to slowly drive up that median house price. But if we take a look at the stock levels here, we can see that the stock levels are sitting at 0.4%, which means that there are approximately 78 houses which are currently listed for sale in the November period, and it's just under its 2-year average of 0.6. So yeah, we've seen over the last certainly over the last 3 months, this really low trend in terms of stock levels. So on average at any given time for the last 4 months, we've probably seen the best part of, I'd say, 60 to 70 properties come onto the marketplace each month. So it's saying there that from a supply point of view, it's been relatively consistent around that same metric. But if that supply is probably more than demand, or demand exceeds the supply, then we're going to look at that in a second, then obviously we're going to continue to see this median house price surge along. But we've seen the median house price grow at the current levels, and we can see here that hasn't really gone above the best part of 70 properties on average each month that are listed. So, and we've seen the median house price grow, so that's certainly a positive thing in terms of continued price growth. If we're seeing that at the current stock levels, the price increasing, so that means that when we poke ahead over the demand side, maybe that demand is still far greater than the current supply. But overall, look, for a market in terms of its size, to have the best part of 78 houses on the market at any given time, given its desirability, we've got a lot of interstate interest. There's obviously a lot of big infrastructure projects in the area, so there's a lot of short-term pressure, particularly on the housing market as well in the area. But to only have the best part of 78 houses for sale just goes to show that from a stock point of view, those levels are very, very low, and it's probably something to keep an eye on going forward to see if that trend goes higher and higher in terms of we get more volume in the marketplace, or the volume starts to retract, right? And no one has a crystal ball in relation to that, but we probably know that generally, particularly those that are interested in selling, right, and want to remain in the area, if stock levels are low just ongoing, then some people might not decide to sell because there's just not enough stock available for them to sort of choose where they might want to go. If they did decide to sell, an established property, downsize or upsize, or move from a rural res place on the fringes of, let's say, Proserpine, to then go down to Early Beach, because there may not just be enough stock. So we might start to even see a tightness and a retraction in this stock if the market continues to go in this direction. But yeah, no one has a crystal ball, but it'd be interesting to sort of see how this one will certainly play out going forward. But in terms of stock levels, to sit at 0.4% in a market as big as the Whitsundays is, I suppose, a good thing for the ongoing price growth, particularly for those that are investors. But we might continue to see that median house price surge along, and it could mean that particularly those that are wanting to enter into the property market, have been sitting on the sidelines for some time, it might be a good time to potentially enter here, because if these stock levels remain the same and that median house price surges along, to buy the same property now in, let's say, 4 months' time, you might be looking at an extra $30,000 more. So it's something to watch for those that are interested in buying in this area. So we've seen there from a listing volume point of view, in terms of stock, on average for the last sort of 3 to 4 months, around 70 listings per month, right? And if we sort of then looked at what that translates into in terms of inventory, we can sort of see here that the levels of inventory as a whole continue to show a downward trend, and the Whitsundays area has approximately 1 month's worth of inventory available in November 22. So based on that demand side, that the velocity of sale and the current listing volume, right, we're starting to see here, a really low trend in terms of inventory. So that's really good, right? So we're sort of seeing, properties clear really well each month in terms of their clearance rate or in terms of their absorption rate each month. And then we're seeing the remainder of properties that don't sell right away then sort of sell, after 4 to 5 weeks, right? So, let's say if a property doesn't sell in the first 4 weeks, it then rolls over into the inventory pool for the next month, right? So we will sort of have this rolling inventory level, and we can sort of see here to have at any given time for the best part of the last, I'd say, 6 months almost, sitting around 1 month goes to show that from a supply point of view, we're on the low side in Whitsundays, right? So I always say this, if the market did go into redundancy based on the velocity of sales right now that we're seeing in the marketplace, all of that stock would be cleared out in a month. And when we have less than a month or 1 month's worth of stock, we have to say there from a supply point of view, plain and simple, supply is extremely low. If that metric was sort of skewed back to where it was in, let's say, 2021, in the month of, what was that, July, where it sort of sat around that 3 months, then we sort of know, if there's 3 months worth of stock, on average, or inventory, rolling inventory, hovering around that 3 months, then we sort of know from a supply point of view, there is a lot of properties there to buy, right? When there's a lot of properties to buy and you don't have that pent up demand, then you're in a situation there where the market is very, very slow, particularly from a house price growth point of view. But overall, from a supply point of view, early beach and the Whitsundays area is trending very low. Obviously, there'd be pockets within pockets as well. Bowen is still included in the Whitsundays catchment in terms of all this data. Proserpine, you have Early Beach, you have the Hamilton Islands, and you have obviously the surrounding suburbs in and around Early Beach as well. So some of those would have their own extremely low stock levels and rolling inventory as well. But as an aggregate, we can sort of see here that it has 1 month as a whole, but within that, right, there probably might be, 2, 3 properties only available at any given time in some of these really desirable areas, right? So overall supply is extremely low in the area. So we've looked at, what the supply side is telling us, and we can sort of see that on any given month, we have the best part of, 70 properties coming on to the marketplace at any given month, and then we sort of had a rolling inventory of around 1 month for the last 3 months. And if we now poked our head over to demand side to sort of see now, what the demand side looks like overall and why that median house price might be potentially growing still going forward for the next 4 months, right? So we can sort of see here, as of November, the days on market sit at 46, right? And which has fallen again after a recent spike. So we can sort of see there that over that last 3 to 4 month period, we've seen a small spikes for 2 months there, and then a drop, and then another drop now in this particular month. And that could be as simple as older properties potentially skewing that data there for those particular months where it might have been dragged up from the average of around 40 days on market. So a property might sell for, it's been on the market for more than 50, 60 days, and all of a sudden 1 or 2 of those sell and it drags up that meter. So I don't look too much into that, particularly when there is a lot of short-term changes in that days on market. I want to look at that overall trend, and that trend is looking really good or healthy from a demand side point of view. And we can sort of see here that 46 days right now, and that's essentially saying that I'd probably say the properties are probably selling in the first, I'd say, 7 to 12 days, right? So a property will go on the market and then it will sell within the first 7 to 12 days on average, and it's creating this data metric of 46 days, because we know that roughly the average contract period in Queensland is around 30 to 35 days generally. So yeah, overall from a demand side point of view, when days on market is generally below 50, that tells us that demand is healthy or demand is strong, right? And we've seen those obviously small spikes over the last 4 months, but then we've seen it relatively trending, in the right direction, particularly from a demand side, for the last 5 months there as a whole. So yeah, it could be signs that, the demand, if we continue to see that trend line go even lower and lower, we might even start to see potentially that, 46 days on market drop down to as low as 30, 35 days. Who knows? No one has a crystal ball, but we're certainly seeing that trend line here. And to have, 46 days on market as a correlation to the supply side, right? We have had the best part of 70 properties, listing at any given month, and then a rolling inventory rate of around 1 month, and to still have, on average, most properties selling within the first 14 days goes to show that, the market is healthy, and then it creates, as a result, this days on market average. So the demand side is looking pretty strong relative to supply, guys, in the Whitsundays area. So when it comes to auction clearance rates, I don't read too much into this, particularly in the regional areas, because it's not a metric that really tells us a great story around what's happening on the demand side. But it's also good to just unpack it to sort of see what's going on. It's not like Sydney or Melbourne where we can really use that as a gauge to temp check how the market is performing as a whole, but it's good to have a look at what the auction clearance rate, because we might be able to get some little gold nuggets out of looking at this data as well. But we can sort of see here for the Whitsundays area that the auction clearance rate sits at 57% in the month of November, and it's actually up from the 2 previous months where it sat well below 20%. So yeah, most regional markets in Queensland tend to be pretty hit and miss when it comes to auctions, right? Majority of them trend well below 40%, right? And yeah, I don't read too much into this, but we can sort of see here that for a market of its size, in and around Whitsundays, it does have a healthy level of auctions, right? It's not a market that doesn't have any auctions at all. There's a healthy level of auctions there, and it still presents an opportunity to sell property, and it still presents opportunity to buy property. And those that are looking to sell or to buy, can get some really good insight as to what these clearance rates look like, right? So, but we can basically see that in the month of November that we've had the best part of 6 auctions, and yeah, 57% of those had cleared. So roughly 3 of those properties sold at auction, and then over the last sort of 4 months it sort of sat well below 20, and it sort of trended around 10 to 7 auctions per month over the last 3 months. So overall, yeah, that auction clearance rate is pretty hit and miss, and yeah, it's sort of horses for courses. Obviously, Whitsundays as well is a unique marketplace. It has a diverse range of housing stock to your ultra mega rich waterfront island properties in and around Early Beach and Hamilton Island that sell for well over and above, sometimes $2, $3, $4 million, $5 million. And then you have those sort of, rural little smaller cottages around, Bowen, and then you have around Proserpine that might only sell for a couple of $100,000, right? And it's generally these properties that are going to auction, right? These properties that are on the older side, probably less desirable, and then these properties that are on the higher end tend to also go to auction because no one generally knows what they might sell for, what they're even worth potentially, so they, agents tend to just choose to take these properties to auction, and that's why we probably see, particularly this marketplace, have a bit of hit and miss when it comes to these auction. But I always say this, guys, when you do have particularly low levels of clearances at these auctions, particularly if you're a buyer, it might even be worthwhile if you have been struggling to buy a home in the area or an investment, maybe turn up at one of these auctions, as majority of these get passed in. So it might present opportunity there to potentially throw your name in the hat and buy a property where there is a lot less demand, right? A lot less demand. So yeah, guys, as I said, as a whole, this doesn't tell us a great deal around what's happening there, but you do get some little bits of gold nuggets here or there if you start to unpack this data as a whole. But yeah, we can sort of see here that from the 6 auctions this month, 3 of them have sold, and then obviously for the last 4 months we've sort of seen it sit well below 20%, which shows to me that from an auction point of view, the properties that might have went to market there, people weren't interested in buying those at all. But yeah, guys, that's the auction clearance rates for Whitsundays. So we've looked at those different data points on the demand side, right, and starting to really paint a picture of what the demand looks like, right? But if we sort of were to, cluster them all together and really figure out and summarize what demand looks like overall, the best metric to look at is the absorption rate, right? And we can sort of see here that the overall absorption rate for Whitsundays is sitting around 89% from August to November. Although this is actually slightly down from 96% during April to July. But from an absorption rate point of view overall, sitting at 89%, right, that is extremely high in terms of a market that is clearing a lot of its stock, right? That goes to show me that it is a market in very strong demand, right? That the best part of 89% of all of the properties that go to market eventually sell, right? They will eventually sell. So if you are someone that has been sitting on the sidelines and don't know whether or not you should sell in the area, well, you've got the best part of an 89% chance of selling, right? And this is actually down from the best part of 96%, which would be close to 100% of properties that are selling in the area, which is completely ridiculous, right, from a demand point of view. But overall, that sort of tells me why the median house price has been surging along, right? We've seen that median house price grow by the best part of 20K over the last 4 months, and you can probably see why here, where there is just a healthy level of demand. People are consuming property as they come onto the marketplace, and this absorption rate is looking very healthy. We might also start to see a lot of investment come into the area, particularly from developers, because if you have a long trend, right, a long high trend of absorption rates, it just goes to show that just overall demand exceeds supply, right? So developers go, ooh, okay, this is a marketplace where we need to come in and add more stock, right? Whether it be houses, apartments, units, townhouses, etc. So we might to start to see further investment come into the Whitsundays area, particularly seeing this absorption rate remain extremely high, because it does show that there is demand for property in the area. And just as a whole, like, there's a lot going on in and around Whitsundays as well. A lot of big infrastructure projects, a lot of new mines that are kicking off. So it offers a lot of great lifestyle as well, particularly those that are living interstate and want to move to Queensland. And if you looked at that median house price for the area versus, let's say, Cairns, North Queensland versus the Capricorn Coast versus Southeast Queensland, you're the best part of, $200,000, $300,000, $400,000, below the median house price in these other areas. So I can sort of see why demand is also extremely strong, because even when you start to benchmark the median house price in the Whitsundays area versus other parts of the east coast of Queensland, it is looking like a very affordable place, and it presents great opportunity, particularly now for investors to come to this marketplace when you sort of benchmark that median house price against sort of other East Coast locations along Queensland and start to see, yeah, $200,000-$300,000 differences when, Whitsundays potentially has some of the same amenity, same lifestyle drivers, then there might be some upside potential there from a median house price point of view, from a capital growth point of view for those that might be interested in investing in the area. But yeah, from August to November, we've seen 304 listings, and then we've seen 271 sales, resulting in an 81% absorption rate. So extremely good for Whitsundays, and a market that is in very high demand here, guys. So we've looked at the supply and demand factors for the Whitsundays area from a sales point of view, right? And that's really paint a picture as to what's going on in that marketplace, what's causing that median house price growth, those low levels of stock, those high levels of demand. So we've had a look at that, right? And now we want to have a look at what's going on in the rental side, right? Because there are still a lot of people that might be potentially interested in renting in the area going forward. People might be moving into the area, starting a new job in the new year. A lot of short-term people, particularly that work in the hospitality sector, are looking to rent. I see it all the time on the Whitsundays notice board. Backpackers, looking for rooms to rent and houses to rent, almost every day posting in that forum. So yeah, having a look at the rental side is extremely important. So if we looked at what's going on from a median rent point of view in terms of the median rental rate, and we can sort of see that it's sort of been retracting now actually, and it's sitting at $471 per week for houses in Whitsundays, and it's actually down $21 or 4.4% since May 2022. So we have a rental crisis in almost all locations around Queensland, right? We have extremely low levels of rental stock, and we've seen the federal government, state government come out in the latest federal budget and introduce measures to alleviate some of that rental pressure, right? And we can sort of see here that in and around the Whitsundays area, we might have seen a retraction in the median rent. We've seen basically in most of the other market updates I've done, particularly for North Queensland, and my office is up in North Queensland, we've seen those rental markets continue to surge along, and me seeing a retraction here in this marketplace is pretty strange actually, considering what's going on the macro level, right? And who knows, this could be one of those things, right, where we might have even had some supply come onto the marketplace in a particular part of the Whitsundays, a lot of new supply come onto the marketplace that has alleviated some of that pressure in relation to rental stock, and it sort of drive down that median rental price. Or we might have seen a lot of properties become vacant, right, that aren't really fetching that rental premium above that $471 per week. So that's sort of skewed and dragged down that median rent for the area. But yeah, for those that are interested in renting into the area or moving into the area, all of those backpackers that are coming in and joining the hospitality sector, we can see here that from a median rent point of view, that it's starting to retract, right? So the great thing about that is that for those that have already been pretty cash strapped and finding it really hard, particularly from a cost of living point of view, and you're moving into this area now where you're looking to rent in this area, that the rents are starting to retract. So overall, there is some ongoing affordability here. But this is also not early beach, Whitsundays as a whole, right? We got to remember that Bowen, Proserpine, all that are part of that catchment, and they tend to have a lesser premium on their rents given that their locations and their stock, the stock quality they have in those locations. So it is markets within markets. So we might even have certain suburbs in and around Early Beach that are charging anywhere between $600 to $700 per week, and then we might have properties in and around Bowen and Proserpine that are charging anywhere between sort of $300 to $400 a week. And if those properties have more stock, rather those locations have more stock on the rental market as opposed to these other more desirable areas that are charging a premium, and that's obviously going to drag down that median rent as well. So it is locations within locations that are all going to be different. So we have to remember that, guys. So don't take this as gospel. Look at it from a grain of salt, and knowing that there are markets within markets where rents are obviously going to be different in and around Whitsundays as a whole. But as we looked at Whitsundays as a whole, just in general, we can sort of see that that median rent is retracting. So we've sort of seen that that median rent is retracting, right? And the best way to determine why it's retracting is we might start to see a spike in vacancy rates, right? Or a spike in supply. But funny enough, this chart is saying quite the opposite, right? So we've still had a situation where rents have retracted, right? But supply is continuing to trend down, right? So we now have vacancy rates continue their downward trend in Whitsundays, now sitting at 0.4%, with only 11 vacancies currently available for rent in and around the whole area, right? And as I said before, I see people posting every day in the Whitsundays forum on Facebook, certainly more than 11 people per month, right, posting in this forum looking for rentals. So just from a supply point of view, just based on that one metric of looking at the demand on Facebook, it is extremely low. And to me, that doesn't align to what that median rent has done over the last 4 months. We've seen that retract by $20. So my diagnosis for that might have been that we might have seen a lot of rental supply come onto the marketplace in areas where that median rent is quite low, right? So in and around Proserpine, in and around Bowen, and that's dragged down that overall median rental price for the area, because we've sort of seen here that this supply, from a supply point of view, from a vacancy point of view, it's the lowest it's been in the best part of 12 months. Easily 12 months, sitting at extremely low levels, yet we've seen a retraction in that median house price. And for me, that just doesn't make sense as a whole. So we have extremely tight rental market here, guys. So my prediction here, and I'm gonna I suppose take my hat off and make this prediction, is that we're going to start to see that median rent, particularly in the new year, bounce back and surge ahead. I can probably, based on this level of supply, I can probably say that that median rent will bounce back pretty quickly in the new year, and I think it'll move into the $500 per week mark, certainly around the next market update I'll be doing in March. So yeah, we'll see if that prediction gets proven wrong, when March rolls around and I do another update. But yeah, we can sort of see here from a rental point of view, given its market size, given that it has such a lot of short-term demand from the hospitality sector, given that a lot of people want to move into the area now and then eventually buy, so they want to rent in the short term, there's probably just not enough rental stock in the area, and it's just been trending extremely low. And then when we know that supply levels become low, then that puts downward pressure on the the new stock that comes online, and obviously owners of these properties, the rental stock, would have to just continue to jack up their rents because there's just not enough supply. And when you have a lot of people in the area that are willing to rent properties over and above what the median is, and we're going to continue to see that surge continue to go along in and around the area. But from a vacancy rates point of view, from a rental supply point of view, guys, in and around Whitsundays, yes, looking very grim actually, and we've seen this downward trend now for the best part of 12 months, and it's really eroding away well under 1% there. And for any market that's sitting under 1%, and that just tells me that from a rental point of view, it's looking a lot like the rest of Queensland and the rest of Australia, where we are in a bit of a crisis here. So I've just sort of broken down, the supply on the rental side of things, right? And we looked at the supply side from a housing stock point of view for sale, right? And what we want to look at now is future supply, right? So, obviously the low levels of supply from a sales point of view is going to continue to put downward pressure and continue to make the market surge along in terms of a median house price. If there isn't, a lot of new stock that come onto the market to take a bit of heat out of, those low levels of stock. And even from a rentals point of view, right, if there's just not enough stock, right, with high demand or not a new supply to take off some of that pressure, then we're going to continue to see the median house price trend just continue to grow over time. So what I want to look at here now is future supply, right? Is there going to be future supply coming onto the pipeline to just alleviate some of that pressure, to cater for that ongoing demand, that population increase, that high level of demand we're seeing particularly from an absorption rate point of view? And as I said, as part of that absorption rate, generally when it's healthy, investors start to sniff around, developers start to sniff around and look at investing in this area. So building approvals are generally a good metric to sort of see and gauge what future supply might look like, right? And we can sort of see here a total of 44 building approvals for year to date for the current financial year. And it's actually the lowest it's been in 3 years. Oh, wow, funny enough. That actually goes directly against what I was saying. I was hoping to probably see really high levels of building approvals here, because that generally then, would lead to, investors and developers sniffing around. But who knows, we might see the investors and developers sniff around the next 12 to 14 months. But yeah, we'll sort of see here, 44 building approvals in there. I don't know what that translates to in terms of the amount of stock. It could, one approval could be, let's say, for 500 residential lots. Who knows? Well, I don't know what that translates into in terms of stock, but we can sort of see here from an overall approval point of view, from a year-to-date metric, it is trending extremely low. But that, don't read too much into this current financial year, right? Because these are approvals here, guys, and I say this all the time. Approvals, what tends to happen as part of the process is, a developer would go out, get, approvals, and then go through a process after they get approvals to, obviously mobilize finance, go through construction. So generally, a place after it's been approved, a project after it's been approved doesn't necessarily come online as active stock until about 1 to 3 years, right? So most of the stuff that's approved now, like the 44 year-to-date number here, will probably come online in the next 3 to 4 years. So don't read too much into what's happening right now from a building point of view, approval point of view. I want to look at what's happened over the last financial year, and we can sort of see there from 2021 to 2022, we've had really high number of building approvals, right? So we know that the market is under some duress right now, under some stress in relation to rentals, and we have some low level of supply and high demand. So we're probably going to start to see a lot of this new supply maybe take a little bit of pressure out of this marketplace. But that only happened, these high levels of approvals have only sort of kicked in the last financial year, and it was still pretty low during 2019 to 2021. So relative to demand, we might even start to see the market maybe balance out for a little bit, but then move back into an imbalance where demand exceeds supply, because in this current financial year we have these low levels of stock. So maybe some of the approvals that have happened over the last 3 years will come onto the marketplace in the next 1 to 3 years, alleviate some of that pressure. But if low levels of approvals remain for this current financial year and the year after, then we're going to continue to start to see the market continue to be under stress from a rental point of view and from a median house price point of view, because there's just not enough supply to cater for that demand, and it's putting downward pressure on prices on the sales side and on the rental side. So yeah, guys, we really looked at the marketplace there, really broke it down, looked at the demand side, looked at the supply side, and really started to paint a picture as to what's going on in the marketplace in and around Whitsundays. And I know it could be a lot to swallow, particularly for mum and dads, novice investors, but I try to break it down as simply as I can. But for those that maybe have forgotten everything I've just said, or you're still trying to process what it all actually means, if I were to just sort of break down in layman's terms what I think some of the trends are and create a bit of a summary as to what all of that is telling us. If we started at the top, we can sort of look at what the median house price is telling us, and for Whitsundays we can see that it is growing, right? And it's mainly due to properties selling in the higher price bracket, mainly around Early Beach, right? So the Whitsundays catchment in terms of its median price and where the data is pulled from includes Bowen and includes Proserpine, and they tend to have a lower price bracket, and we're seeing the properties that are transacting in and around Early Beach, and the proximity to Early Beach transacting at a lot more of a higher price guide, and they're continuing just to drag up this median house price over time, right? So if we're going to see this median house price continue to surge along, then we're going to start to see more. We need to start to see more and more of those properties in the higher price bracket continuing to sell and sell for much more than what they are currently worth, and not discounting for the market to continue to surge along. But overall, from a median house point of view, I've said it as part of the presentation as well, is when you start to benchmark the median house price of the Whitsundays area versus, let's say, Far North Queensland versus, let's say, Bundaberg region versus Gold Coast and Sunshine Coast, and there's like the best part of $300,000, $400,000, $500,000 in difference there just in the median house price. So it presents a lot of value for money for investors as well as home buyers that are potentially looking at entering into this marketplace, whether you're local, interstate, or intrastate. So, from a median house price point of view, yeah, it does have a lot of upside in and around Whitsundays. From number two, we can see here that the listing volumes, they reduce further with a high absorption rate. We might see the market continue to surge ahead and the median house price continue to grow, right? So yeah, if we see listing volumes continue to reduce, we're going to start to, and the absorption rate remain high, then the median house price is just going to continue to grow, right? House price is going to continue to grow, right? Because stock levels or supply levels relative to the demand is super low. So we're going to be in a situation all the time where you have one property that comes onto the marketplace, you have 10 potential bidders for that one property. It might come on for $700,000 in and around Early Beach and sell for $750,000, right? Because there's been 5 or 6 people that have bid for the one property and paid over and above what it's actually worth, and it's driving up that marketplace because there's just only one of those properties and there's 7 potential buyers. If it was the other way around, if there's 7 properties, 1 buyer, that looks like a totally different marketplace. You start to see a retraction in the median house price, whereas it's the opposite right now that's happening. And if we continue to see that, it's going to continue to play out where the median house price will continue to grow because supply is super low and demand is high. From a days on market point of view, we can sort of see from a demand side that it is healthy, and we've seen some changes there in terms of the days on market metric jump slightly over the last 4 months, but then that's been dragged up mainly by properties that have sold outside of these really heated markets around Early Beach that have slightly dragged up that median house price. And if we actually looked at even Early Beach, I pulled up some of the data and looked at Early Beach individually, and Early Beach is hovering around 35 days. So you can start to sort of see that in markets within markets, the days on market metric is a lot different, and we can see that demand is a lot stronger in certain parts of the Whitsundays area. But yeah, don't read too much into some short-term changes in the days on market. Mainly just have a look at that trend, and we've seen a really healthy trend for days on market in and around Whitsundays. And for investors, this tells a really great story here that when you have low levels of supply and high levels of demand and days on market, the days on market metric telling you that is the case, as well as the absorption rate, then we kind of know that you're in for a lot of short-term capital growth here. You're entering into a market where supply is exceeding demand in the short term potentially, and then we're going to probably start to see some short-term price accumulation there. $500,000 property over the next 12 months might be $580, given the current climate that the marketplace is in. In terms of auction clearance rates, as I said, it's a bit of a hit and miss market, but I made a point here, and I always do this in my market updates, that it presents good buying opportunity, right? When you have low levels of clearances, right, that presents a great opportunity for buyers, right? Because not all properties are selling, they're being passed in. Rock up to one of these auctions, show your face, and maybe throw your name in the hat, because you're not competing with 5 or 6 or 7 other bidders potentially here if these properties if these auction clearance rates remain extremely low. So maybe turn up one of these auctions, guys, and give that a crack if you're in the marketplace right now, if you've been having difficulty trying to buy a property in the area. The last couple, right, in terms of the absorption rate. So if you are wondering, if you do own a house in the area and wondering, should I sell right now? Is it a good time? The data is telling us that it is a great time to sell, right? Stock levels are extremely low, absorption levels are extremely high, so you have an 89% chance of your property selling right now, and probably in a scenario where there's going to be multiple bidders. So basically you pick or choose the best offer in this case. So from an absorption rate point of view, it is extremely high, and the market looks to be in really good demand. And then from a rental side point of view, I made a point here that we've seen a retraction in the median rent despite the vacancy rate sitting under 1%. So there's a bit of an anomaly going on there where that that median rent has retracted, but we've seen the lowest vacancy rate for the area it's been in over a 12-month period. So there's a anomaly there between the two data points, and my guess is that it's been skewed by potentially some stock that's come onto the marketplace where they're not getting so much of a rental premium, and it's slightly dragging down that median house price. And I'm more or less talking about around Proserpine and around Bowen, and not directly in and around Early Beach as a whole, because we're talking about houses here, guys, and that median rent has retracted, but the rental trend from a vacancy rate point of view, from a supply point of view, is extremely low. So there is an anomaly there, but don't read too much into that. If we do, we're doing another market update around March. We'll have some further historical data. If it's still telling us the same thing, then we probably know that maybe the rental market is potentially cooling there, where there is enough supply to cater for the demand. But for now, I believe there is a bit of an anomaly there with that data. And then lastly, to finish off, we've looked at what the future supply might look like. Obviously, the market is in duress from a supply point of view, so we're still in a situation where there are multiple bidders per property, and that median house prices continue to surge along. So we need to see some new supply come into the marketplace to alleviate some of that pressure. And what we've seen from some of the data is that, it's looked pretty positive for the last 2 financial years. There might be some supply coming into the marketplace over the next 12 to 24 months to eliminate some of that short-term pressure that's happening here. However, we've seen the year-to-date building approvals rate really, really low, and that's a bit problematic, particularly for the midterm, right? I'm talking about 3 to 5 years time, where we might see history repeat itself, particularly if the macro drivers remain the same, considering the economy is healthy, considering all the lifestyle drivers are still there, considering that people still want to move and live in the area, right? If we don't have enough supply in the midterm to cater for that ongoing demand, we might still be in a situation where rents are going to continue to just go up, and then that median house price is going to continue to sort of surge along, and we won't see a retraction in that overall. But guys, I hope that's been really helpful. This can come across as data heavy, and it can be a lot to swallow, particularly for mum and dads and novice investors. But I hope I've broken it down as simply as I can and gave you these takeaways, just so you can just start to put it in the back pocket and figure out what you want to do going forward, guys. And I hope that's helped you with your journey, whether you are looking to buy or sell in the near future. And again, guys, thank you. My name is Troyson Bassini. I am the CEO, founder and director, lead buyer's agent of Capricorn Life Buyers Agency. We do service the Whitsundays area, and we are a buyer's agent. So if you are struggling to buy a property in the area, you need help navigating, you are an investor that feels as though you might need some professional assistance, guidance to get an outperforming result, feel free to reach out, and more than happy to have a chat to anyone that needs help, guys. You can check us out on our socials, visit us on our website, give us a call on that number, and go from there. And also, if you have any questions about what's been presented here today and you want to unpack it a little bit more, feel free to leave a comment in the comment section, visit our website, make a booking to have a chat to me or one of my team, and we can go from there. Thanks, guys, and bye for now.